What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, I wanted to go over with you this week that just passed, this chart for the DJ30. All right. We had some absolutely brilliant opportunities this week. If you were patient, if you were able to sit on your hands and just stalk that setup, wait for that setup to come, wait for that day three, wait for everything to line up perfectly, wait for an obvious trade, bro. Sit on your hands and let the market bring the trades to you. I promise, if you can really lock this in, trading can truly become a pursuit of pleasure for you, and it will no longer be this stressful life or death game that you're playing every day, okay? You can sit back, relax. You can take one trade, two trades in the entire week and still do everything that you need to do, right? This is truly the 4-hour work week that people dream about, all right? You got the setups, bro. You've got the setups. Now what you need is some faith. You need to trust your setup because it pays off, I promise you. Okay, now let's get into this chart. We're not going to spend too much time on this initial setup here on Wednesday, this 3 days of breakout traders in the market, this 3-day setup. All right, but I do want to go over it with you just briefly, all right, and touch on a couple key ideas here, okay? Now you can see that we have our day one breakout traders in the market right here. We barely break out, but it counts. Day two breakout traders in the market, and then on Wednesday we have our day three breakout traders in the market. Now this happens right as the New York session opens, okay? This is from 9:30 right here to 11 o'clock. This trade really started to go and move, I believe, right around 10:50 or 11 o'clock, all right? And that's a very common occurrence for, it to take that long. We have like an hour up, an hour sideways, and then an hour down for this pump and dump, all right? So what I want you to notice here, okay, is that this move occurs, it begins from outside of this daily range. We do not want to be trading inside of these daily or weekly boundaries, all right? Unless we have an easy, obvious 3 session setup, we might trade on the inside here and there. But those are the might come back type of trades. Those are not our 90-10 probability trade setups. Those opportunities are going to occur outside of that high and low range of the previous day. So just as you can see here, right? The market comes up, it breaks out of Tuesday's high, and then puts in this reversal pattern, puts in this peak formation high, where at? Just above the previous day's high, right? And then it rejects and the market rapidly begins to fall. And where does it go? Straight through to the other side of the range, straight through Tuesday's low. So we went straight from the high of the week or high of session or high of day, straight down to the low of the day, right? We go straight from one extreme to the other extreme. And why is this happening, right? Remember, we are not trying to trade a 5-minute setup or a 1-minute setup, even though we might be entering the market on a 1-minute or 5-minute chart. We're not hunting a 1-minute setup. We want to trade a market that is potentially being driven by other time frame traders, higher time frame traders. And those other time frame traders are triggered into the market at the break of a daily or weekly level. Remember, these other time frame traders, these daily, weekly, monthly time frame traders, they are using the daily candles, okay, or the weekly candles to enter their trades, okay? They are trading the breaks of daily and weekly candles, okay? So they're waiting for this breakout, okay? They're waiting for this daily candle or this weekly candle to break a certain level before they trade, right? So when it breaks above Tuesday's high, we have other time frame buyers who feel like since this market has broken out, it's going to continue to go higher. They have a firm belief that price is going to be moving higher. So what do? They buy it, right? And as soon as they buy it, all of these entries up here are engulfed. They're taken immediately into drawdown, and their accounts are being eaten into, okay? And where are they going to put their stop loss? Most likely, okay? We can assume that since these traders are trading the breaks of daily or weekly candles, if they're entering up here at the top of this candle, their stop loss is going to go on the opposite side of that range, right? At the low of that daily candle. All right. For that reason, that's why this market explodes from the high of the week or the high of the day straight to the other side of the range to the low of the day. And those are the setups that we're interested in. We don't want to sit at our charts all day and stress out. We want to get into a trade and let it ride, bro, and feel comfortable. Also, these are the rinse and repeat setups. These are the scalable setups. What you're looking at right now, this could be your entire trading career. If you could learn to master this setup and then just sit on your hands until your setup is there and trade that. That is the trade that you can scale into, meaning you can drop truly substantial size on here. Like a lot of traders are risking 1%, 2% per trade. This is a trade where you might risk 5%, 6% on this trade and rapidly compound your account balance. You understand what I'm saying? All right. Now, what I really would like to talk to you about is day one, day two, day three on the back side of the week, Wednesday, Thursday, Friday. Okay. Friday, we have another day three trading opportunity. Okay. You can see that just like we went over, we have this false break at the high of the week on Wednesday. That starts our day count. That's day one. And this is confirmed a false breakout when we break through the opposite side of that range. Okay. Day two also breaks below Wednesday's low, also sort of confirming that false breakout. But either way, when we put in a new weekly level, okay, a new high of the week, a new low of the week, that is very often the start of our day count. Very often that's our day one, okay? And you can see here, this just aligns with the static weekly template of Monday, day one, Tuesday, day two, Wednesday, day three on the front side of the week, and then Wednesday's day one, Thursday's day two, and Friday's day three on the back side of the week. We're just following that. So if you were only trading on Wednesday and Friday, you would have made out like a bandit, bro, right? So we have our false break. We confirm that false break. So we have our day one, day two, and then day three is when we come to the charts on Friday. And we're going to take a closer look here at Friday's chart. All right, so now we're just taking a closer look at the backside of the week. I just want you to see this, burn this image into your mind, this 3-day setup. All right. Now, the market's only going to do three things: breakout, pullback, continue, breakout, pullback, reverse, or breakout, pullback, and enter a trading range. In this case, we're looking at a breakout, pullback, continuation scenario. All right. Now, remember, we were talking about this Wednesday. We're talking about looking for the opportunities outside of that daily boundary, all right, and not trading on the inside. But sometimes you will be trading on the inside. Like, for example, on Friday, we haven't really broken any kind of level. Like right around 9 o'clock, we barely break out of, the low of the day from the previous day, but we're still sort of inside that range. But this is a 3-session setup. All right, we have the market opens, the Asian session trades, and it trades to the upside. We go up above the closing price of Thursday, which is that yellow dotted line, and the market coils on top of that closing price before when the London session opens, we fall all the way down to that low of the day level from Thursday, right? The market then proceeds to make its way back up right under closing price and then fails again and breaks the low of the day, making a new low of the day right at 9 o'clock. We can take a closer look at this. This is that 9 o'clock low. You can see we put in a new low of the day right at 9 o'clock. So essentially what that means is that London traded down lower, and then we come back up here to try to retest that London high, and it fails. We fail to get back up to that London high, and then we put in a new low. That's sort of like the market showing its hand a little bit, right? Putting in those new lows. That means that the low of the day hasn't been put in place yet. We could be potentially continuing lower. All right. Now, again, after that 9 o'clock low is put in, we come up here and we're going to take a closer look at this. But this yellow trend line that I manually put on here is the 8 a.m. high, okay? The 8 o'clock hour high. So let's take a close look at that. Here's the 8 a.m. high. Here, 9 o'clock puts in that low, and then right around 9:15, we are here working back into this high right under closing price of the previous day, right? We're working back up there, but we can't quite get up there. Here's our micro M formation. We trade lower once again. 9:30 hits right here. Let me zoom in for you. You see 9:30 is this line right here. So there's our 9:30 candle. 9:31 engulfs that to the downside, okay? And we put in another new low of the day level. We go lower than we have before today, okay? Again, that's the market potentially showing its hand there. All right. So we go lower for right at 9:30, we put in a new low of the day. And then so that's a breakout, right? Just like this was a breakout. Are you following me? So here we go. Breakout, pullback, continue. We put in a new low. That's a breakout. So breakout, pullback, continue. We pull back, we retest the retest of the 8 a.m. high, right? Can't make it up there. Engulf, we have another micro M pattern right here, an engulfment pattern right there at time is this happening right before 9:45, so probably about 9:40 we have this micro M formation. Now if you look, we have this last bullish candle, that last blue candle, which is engulfed by the following bearish candle, okay? That's on a 1 minute chart. If we could zoom into a 15-second chart, we would see the M formation. But as it is on the 1 minute chart, it just looks like an engulfment. But if you know this, right, if you know what an engulfment is, then on a lower time frame, that's actually our M pattern. There we have an M pattern working back up into this high. We're pulling back into that high for the continuation. All right. And I've told y'all before, most of my best trades are happening in between 9:30 and 9:45. This is no exception. When we go to the next slide, we have our larger M pattern put in place. Now, remember, right here is 9:30, 9:31. 9:31 engulfs that 9:30 candle. Traders might have entered short right there, okay? Getting ready for this continuation, right? The opening bell just rang. We should be off to the races. And so we enter on this engulfment. And what happens? Well, if you don't pull in your profit, by the time we get here, we start trading back up into your position until we go through it. You probably get stopped out, and then the market just drops off the face of the earth, bro, right? In the direction that you thought it would. So you had it right, but you got stopped out. This is what Stacey calls the first mouse. This is a trap that we all will fall into at one time or another. Okay. And it's not a big deal. It happens to everybody. You should be prepared, right, to take a loss. You should have considered the risk and reward prior to taking the trade. So you should be okay with that loss. You can re enter if all of our confirmations, our entry criteria is met after that. We can re enter this market and still get what we came for. But this happens a lot. And so, one way to avoid this trap, to avoid becoming that first mouse, you have to pay attention to this, the middle structure of the M pattern. Okay. Every M has this middle structure. And you can see here how we've sketched this M out. This is the middle structure. Okay. So, here's, the first structure, the middle structure, and then the last structure of the M, okay? The M pattern. I'm just trying to make this simple for you. This is the middle structure. Now, if you can wait to see that middle structure and let the market pull back, and then we get, our micro M, our engulfment right here that goes up, you know, maybe whatever they call it, how they say it. This takes a draw on liquidity from the 930 highs right here. Okay. It hits, takes all this liquidity, stops all these traders out that went short, early, the early birds. Okay. The first mouse gets trapped. Okay. And then the market goes. So if we entered here, we're good as gold, bro. You just hold on to this thing. Hold on to it. you know, it's a day three opportunity. It's an ain't coming back type of day. So you hold on to that thing. And you can see it works out beautifully. No matter where you entered, you could have entered anywhere, you know, right here. You have how many minutes, bro? Like this is 9:30. You know, from this pullback, you still have like 1, 2, 3, 4, 5 minutes to decide whether or not you're going to enter this trade, and you could enter anywhere right here. And if you hold this sucker, bro, you're going to make some money. All right. Remember what this day looks like. It's a near vertical drop off. Okay. This market melts. There's no pullback into your position, there's no drawdown into your trade here. It never comes back up and hits any of these candles here. So you're safe no matter where you entered if you were shorting this market, as long as you shorted it somewhere around here. Okay. And you would have been safe even entering somewhere down here. We take this shit too serious, bro. We want to get the most precise entries and exits, and we can't stand to go into drawdown, not even a little bit. But until you're a legit pro at this, bro, and you've executed these trades, 10,000 times, you're gonna not be so precise with your entries. But what I'm trying to show you is that anywhere you entered right here, you were good as gold. There's no reason to stress, bro. Even if you did sell it right here and then it pulls back against your position, right? Yeah, true, you got some heat. There's a little bit of fire on you right there, making you nervous or whatever, but you're still good as gold. And of course, you don't know this beforehand, right? But I'm trying to show you, what these trades are supposed to look like. There should be no heat into your position, okay? You shouldn't have to think about it that much. You shouldn't have to watch your screen and stress out minute after minute, every single minute of this trade. You should be able to just enter your trade. It goes immediately into profit and does not come back. Okay. Those are the only types of trades we want to take. Okay. Now, I hope that makes some sense for you. I hope that helps you out. I appreciate all the love the channel's been getting, bro. We're at like 915 subscribers or something. That's completely insane. But I appreciate y'all being here. The Discord's really been dead. Nobody's in the Discord. I expect you to talk. If you're in that Discord and you want to trade with me, I need to know that you're there. So if you're in that Discord channel and you want to trade, you want to hear something from me, you want me to call out my trades, let me know that you're there in the morning. or else I'm staying radio silent. Okay, this isn't a signal group or something. This is something for us to build on. So if you're not going to be there talking, I'm not going to be there talking. You know what I'm saying? But but if you got any questions, feel free to drop them right here in the comments, bro. If you got a chart you want me to go over, if you had a bad trade that you lost and you want me to check it out and tell you where we could improve or something like that, let me know in the comments. Send it to me in my email or whatever, and I will make a video about it or whatever. If there's some subject you want to know more about, if you're confused about the 3-day setups or the weekly day count or whatever it is, just drop it here in the comments and I'll be sure to get a video out soon. Okay. Anyway, man, I appreciate y'all. I hope you continue to free your mind.